Welcome back everyone to the Moneycontrol live stream. You are watching Markets with Santo and CJ in association with M Stock by Mirae Asset. Well, it seems like it's a choppy day which is going to end on a positive note. Santo, there was no relief at one point of time for the bulls as the market were heading towards the day's low and we hit our fresh 52-week low in the session. But clearly there has been some recovery in the past 10-15 minutes. And at this point of time, the Nifty and Sensex both appear to be in the green. But for the week, we will definitely close in the red. We are likely to mark the worst weekly performance for the benchmark indices since May of 2020. And if you look at the small caps and mid caps, that is where a lot of capitulation was happening in individual counters, likely because of some selling pressure coming out from the retail investors, which Santo has been warning us about, apparently. So clearly, quite sort of a mixed bag, but the benchmark index is probably not giving the true picture or true nature of the the performance of the day, Santo.
Well, yes, and I think choppy is I would say understating it. It's been nothing short of a roller coaster ride today.
Yeah.
But if you look at the broader trends, Nifty has been pretty much volatile, but at the same time, the trend in mid caps largely has been that it's been very bearish more than the frontline indices. Yeah. I think that is where the main pain point is at this point. Retail and HNI probably are trying to exit positions, at whatever price they can. That said, the market appears to be in a oversold territory for now because the fall over the last 4-5 days has been pretty steep. So purely on technical grounds, you could see some kind of a pullback rally here, but at the same time, I think one needs to be very wary about what one is buying in second line stocks.
Yes, and as I was saying in the morning as well, I just feel that technically there is ground for a good pullback in the market, and probably the fact that we are not closing towards the day's low maybe points towards that fact, and maybe come Monday or Tuesday we could see some bit of a bounce back in the market. That said, on the
before that, I would say that CJ, if you're getting, if you know that you're holding junk, by now you would have got a fair idea, because the price corrections in some of the stocks has been quite brutal. I think the rallies should be used just to exit that. For many of these stocks, the story is over. You're not going to see those same prices for at least some years to come.
Oh, wow. That's quite a call, Santo. That said, let's dive into the individual stocks that we thought that quite active in the trade and something that investors should look out for.
Yeah, starting with Nippon AMC. Now, Nippon Life AMC, if you're bullish on the mutual fund industry, you keep repeatedly highlighting the fact that Robin Hoods, everyone is rushing, making a beeline for mutual funds, and you're seeing that in the strong SIP numbers also, right? I think there's no reason why you should not be bullish then on stocks of asset management companies. They've been underperforming for quite some time in this market, and I think that creates a window of opportunity also. Given the sustained underperformance that you've seen for a while now. Now, Nippon Life AMC is one of the leaders in passive products such as index funds and ETFs, and that's where most of the money right now is also pouring it into. According to CLSA, it has cut the price target for the stock from 460 to 400, but says that valuations are pretty compelling, are pretty attractive at this point in time, and already the stock price seems to be pricing in a 30% decline in the Sensex for FY23.
Well, Santo, I feel valuations are not compelling, but they are probably just justified because of the overall outlook for the AMC space. Probably also, if you're wanting to turn bullish on the AMC space, right now would be the least opportune time in my estimate to get bullish on the AMC space, because once direct retail investors start pulling out money, the next one in line would be the SIPs and your mutual funds. So with the market getting more volatile, you would expect that those SIP numbers will also come under threat going ahead. Apart from that, if you look at the fundamentals of Nippon itself, the sales to AUM ratio of Nippon, which is the yield, Santo, that they make, that itself has been declining largely because of your stock market has been declining over the past 6 to 7 months. Apart from that, you have a high competition in the mutual fund industry at this juncture. Apart from that, you talked about their leadership in the passive products, Santo, but I don't feel that is something to be really happy about at this juncture.
Why?
Because of the fact that these products usually have a very, very low management fees, right? They have very, very low management fees, and that means the more the share grows of these sort of products, yes, you might be able to get a lot of AUM, but you will be getting it at far less management fee than probably somebody else.
But you'd be making money off the volume, CJ, wouldn't you?
I doubt it. So, Santo, it's not like that Nippon is the only one out there in the passive, right? You have newer mutual funds who have been coming in, like Navi and all, who are just solely focused towards getting passive products into investors' hand. And we have not yet seen somebody like Zerodha come in, who also have plans for AMC, right? And they have explicitly stated they want to be more on the passive side than on the active management side. So clearly, the trend is going towards passive products, in the AMC industry, and these sort of products will not get you the sort of margins that probably mutual fund industry used to enjoy in the past when active products were more dominant. So that is why I would stay a little cautious on Nippon at this point of time. The other stock that I'm quite bullish at, and I've said this in the past as well on the show, is Coal India. I mean, you look at the stock's performance today, it has continued to be on the strong trajectory that it has shown over the past 5 to 6 months. Importantly, it actually also broke above its 100-day DMA and sustained above that level of about 180 rupees per share. So clearly, that is also a good technical indicator in terms of how the stock momentum is going to be going ahead. Apart from I've already talked about the earnings side of the business. I mean, we know the entire coal shortage crisis that has been happening in the economy and how that benefits Coal India because it's getting higher auction premium prices, in the secondary market, that the coal that is selling in the secondary market. Also, valuation-wise, Santo, I mean, 5.6 times one-year forward earnings is quite compelling, and I don't think investors are still yet factored in, the entire positivity on the earnings, because this valuation at 5.6 times today, one-year forward, is just equivalent to where it was 3 weeks ago. So clearly, there has not been too much appreciation in terms of re-rating of the stock, and there is still a potential left for some more re-rating to happen.
I think, CJ, according to me, there are two reasons why probably the market is still not, willing to give a higher valuation to Coal India. If you look at the growth in earnings throughout this year, all 4 quarters, it's been quite good.
Yes.
We know that there is a coal shortage, but look at the price performance. It's just not been performing that much, compared to what some of the other stocks have done, which means that, market still is very hesitant about the stock. One is, of course, the PSU tag, very clearly, which, in the past also there's been quite a few cases where the moment the company starts doing well, the government starts dipping its hand into the till. That's one reason. The second reason also that this is some kind of a sunset industry, that is something you can't really deny. The moment coal shortages ease, that tag of, this being a polluting industry, polluting company, that once again comes to the forefront. This is a good dividend yield play at this point. I would say that there's no denying that, and the company's earnings are also going to be good, which means that probably it could hand out a bigger dividend next year. So purely from a dividend play point of view, I think it makes sense, but you need to be very clear as to why you're getting into this stock.
Santo, I hear you on the ESG front, on sunset industry and also PSU, because there have been some rumors out there that possibly there could be some stake sale happening in Coal India as well, as the government tries to meet its divestment target for FY23. But I would suggest that I think investors could look past all of that if the earnings momentum is that strong going ahead into FY23. Clearly, FY22 was very good. FY23 is expected to be even better, and that coal shortage, Santo, it's a structural issue at this point of time. I mean, Coal India is trying to increase production, but is still not able to meet the demand that is out there, and we have not yet seen the economy go gung-ho at this point of time. I mean, we know private consumption has still not come back to pre-pandemic levels. So clearly, there is upward momentum in demand, whereas supply can't catch up in the short term. So clearly, this earnings momentum is going to sustain, and that is why I feel that investors should be able to look past a lot of these near-term headwinds and look at the longer-term earnings trajectory, at least for the next 1 to 2 years. And that is my case for the re-rating on the stock.
Well, I don't dispute the earnings momentum part. That definitely will continue, but I'm just not very sure if the market will still be willing to kind of re-rate the stock. That's
I think it will be. I think ultimately market will see the earnings, and that is how that is where they will go.
I will use one of your favorite lines, which is only time will tell. Jubilant Food is the third stock on our watch list today. Now the stock has been taking quite a bit of punishment over the past month. It's fallen below 500 rupees now. Many brokerages have also turned bearish. Now, CJ, in the past there was a reason why the stock used to do pretty well. No matter what, it would be in that 800 to 1200 rupee range. All kinds of negative news, but the stock would manage to weather it well. But that also happened to be a period when there was, investors looking for exposure to the QSR space had few stocks to choose from. That certainly is not the case today. Add to that the fact that we are in an inflationary environment, which there is risk both to demand as well as there's higher input costs also. Now UBS has trimmed price target for the stock substantially from about 830 odd rupees to 600 rupees, and it sees almost a 70 basis point dip in its margins for this year. This is a stock I think probably could continue to be under pressure. It's fallen quite a bit, leading many to think that this is probably a bargain at these levels, but I feel perhaps this downtrend could continue for some more time.
Now, Santo, I hear you on the bearishness. I clearly
You've been hearing me well today.
But Santo, I don't agree with the fact that there is more downside. I think I do agree with the fact that it is a bargain at these valuations, because let's not forget, Jubilant is a market leader. It has a dominant share in the pizza market, and it's trying to expand its portfolio into other segments as well, such as biryani as well as Chinese food. So clearly, this is one company which knows how to dominate the QSR space, and a very automatic proxy to the entire India consumption story. I mean, if you're bullish on India, if you're bullish on Indian consumers, then I think you have to be bullish on Jubilant in the longer term. Apart from that, the shorter term headwinds you talked about, inflation, I think that also could abate going ahead as grain production or food production this year improves because of normal monsoon. Clearly in the second half, even the RBI expects some sort of tapering off in food inflation going ahead, and that I think should be able to at least provide some cushion on the margin side, some relief on the margin side. And just to buttress my argument about India consumption story, one of the cohorts of investors who are always bullish on the India consumption story is the mutual fund sector, right? And mutual funds have been the ones who have been buying this dip in Jubilant Foods. I mean, if you look at May alone, they bought more than 317 crores rupees worth of Jubilant shares in May. So clearly,
how much does the percentage stake increase amount to?
Maybe around 50 to 60 basis points. Yeah, it's not much.
You're trying to put a big number out there.
So that it doesn't matter, Santo. What matters is that they're buying the dip. They're buying the bargain, and that for me it goes to show that they clearly see that this is an opportunity to get into a very, very lucrative stock that probably eluded a lot of investors in the past.
Well, before we move on to our next stock, just look at the volatility, CJ. And Nifty is down by again around 80 points. It was in the green as when we
Exactly. We are now actually heading towards the day's low. In percentage terms, we're down about 0.6% on Nifty and about 0.4% on the Sensex. But it's the mid cap clearly which is feeling the pain at this point of time. The Nifty mid cap 100 index is down about 1.3%, Santo, and heading towards the day's low as we head towards the closing bell.
Your stock, CJ.
Yeah, the next stock on my counter is Delta Corp. Clearly one of the most outperforming stocks on the street today. Stock rose about 11.5% after it announced that its gaming arm, basically Delta Tech Gaming, has filed for IPO with the SEBI. Now they are planning to raise about 550 crores, out of which 300 crores is a fresh issue, and the rest 250 crores will be taken by Delta Corp by selling a minor stake in the IPO. So clearly, Santo, good amount of cash coming into the company, which will likely be reinvested in growing its core business, which is the casino business in Goa. Also, incidentally, they also, finally received the final approval from the Goa government for opening a new resort in Pennem, which is going to add to its overall, sales outlook going ahead. So clearly, couple of good news. Good news developments coming in for Delta Corp, and that has probably for the time being abated a lot of the selling pressure that the counter was seeing in the recent past.
CJ, I think probably it is more of technical factors that could weigh in on the stock at this point. Remember, the stock has now almost come off by close to about 40 to 50% in a very short span of time. That's from April.
And that is why I feel, Santo, the valuations are quite depressed. I mean, for this sort of a earnings performance going ahead, if we can see these sort of things adding to the earnings performance going ahead, I think valuations are quite depressed.
See, this kind of steep fall, when you look at it, it indicates that some really smart people are selling out, that nothing else can, and the way in which the stock price has been very slowly and steadily coming off, you didn't hear, or notice any kind of big swings barring 1 or 2 days. The rest, very steadily it has been coming off, and even both fundamental investors as well as technical analysts have been quite puzzled by the way in which the stock has come off. The big concern for the market right now is about the higher GST rates on both casino gambling as well as online betting. That is something which is
but
going
it's still very speculative at this point.
It is.
I mean,
probably maybe
government has also not shown any indication yet that they are going to raise rates on those two segments.
Maybe, but there are all indications. And if you look at the stock price today, it reacted, it rose sharply, but again at high levels you're seeing a lot of selling pressure because HNIs and other investors who recently taken exposure to the stock, they've seen a very sharp erosion in their holdings, and for the time being they seem to be getting out. And remember, Rakesh Jhunjhunwala, he's been one of the biggest supporters, cheerleaders for this stock.
Has been. He still is. Come on, he still holds a substantial stake in the company.
He holds a substantial stake, but he's also trimmed his exposure to the company, right? And that would have also sent out a negative signal to investors looking to bet on the stock.
Santo, I feel that a lot of the stock movement has to do with those sort of short-term speculative factors tend to do with the longer-term fundamentals of the business, and that is the reason why I feel that the stock is quite depressed in terms of valuation if you just go by the earnings performance.
And the last stock on our watch list today is Godrej Consumer Products. Now, this stock has been one of the underperformed, the laggards in the FMCG space. There's been a change in management which has been viewed positively by the street, but
that seems like an ages ago, right? I mean, the 20%, 25% rally in the stock at that point in time seems ages ago.
Now it's almost down more than 20% for the calendar 2022 so far. Now, a few things have been going right for the company. Already the domestic sales volumes have moved into double-digit figures in the last couple of years. So, there is definitely improvement there. Besides, the company is also doing well in its Africa and LATAM business. Now, the whole focus is whether the new CEO, he's embarked on this refresh strategy. The call is on that whether he'll be able to make any big changes there. The market definitely is quite bullish on that. Most analysts are. The company has guided for double-digit sales growth in FY23 and also volume growth in the low single digit. Company has already said that there will be some bit of margin pressure sequentially because of higher palm oil prices, but that is expected to normalize now that the ban has been repealed in the quarters going forward. Analysts have not largely changed their earnings estimate for the company so far. And considering that it's not gone, the stock price has not gone anywhere, maybe this could be a stock to watch out for.
I think, Santo, the earnings estimate will change quite soon, given that the outlook for growth still remains quite sluggish. I mean, we are still in a demand environment which is still not showing the sort of signs that it had prior to the pandemic, and the case has been compounded by the fact that we are now also having high inflationary period, a broad-based inflationary period in the economy. If you look at the rural side, if you look at the urban side, clearly both those markets are suffering from some sort of downtrading in products from consumers. Apart from that, one of the factors, earlier in April, March, if you remember, Santo, a lot of people were optimistic about rural demand because they thought that with agri product prices rising, a very strong rabi sowing season, clearly that could boost rural income and therefore rural demand going ahead. But recently Spark Capital came out with a report, and they said that actually rabi crop yields have fallen 5 to 10%, Santo, in the previous sowing season, and this is largely because intensive heat waves had led to the yield or the crop maturing much earlier than what usually happens. So clearly they believe that the rural demand revival will probably take much longer than what the market was estimating, and therefore I'll be a little cautious as of now to go gung-ho on FMCG names, because I feel that rural demand revival story still needs to show traction, still needs to show some numbers before the market can actually get very optimistic on it.
Well, so what is there on the horizon to keep an eye out for CJ? Well, Santo, more bad news?
No, actually, interestingly, we are quite light on economic news as well as data points next week. The most important, probably the thing to look out for would be the U.S. Federal Reserve Chief Jerome Powell's speech later tonight. It'll be interesting to see whether his tack changes after the market reaction to his speech following the FOMC statement. So that would be something that the market will be clearly watching out for. Also, I think the US markets are also shut on Monday on account of public holidays. So clearly there will be a little lack of cues on Monday and Tuesday for our markets. It will be interesting to see how that will affect sentiment here, because so far we have been following Wall Street in terms of what direction we take. but because of the closure of the US markets on Monday, it will be interesting to see how our trade sets up for the first 2 days of the week. But apart from that, yes, it's quite light on economic data points as well as on any other meaningful events.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and I hope you enjoyed the show. Please do share your feedback with us in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your news, guys, stay tuned to moneycontrol.com and the Moneycontrol app. We'll catch you again live Monday, 9 a.m. sharp.